What's up, guys? I hope you guys are having a good weekend so far. Happy Labor Day. In today's video, we're going to talk about the SPY, the NASDAQ, the IWM, and the crypto markets. So without further ado, let's get started with the video. So today's video should be a bit quicker. Essentially, this is a 4-hour chart of the SPY. And what I'm looking at here is a downtrend. And it was basically a break of a falling wedge, which caused us to pop. All right, so now what happened is we ended up coming to retest the breakout point of this falling wedge, and now that is going to sort of be a level of support as we continue lower. Obviously on Friday there was a lot of selling pressure, so bears were completely in control, and essentially the next levels of support are going to be around 388 to 390 on the SPY, and that coincides pretty well with this downtrend. So I'm not expecting a strong bounce, because also when you look at all of this on a daily chart, you can see, clean this, but essentially you can see that the lower level of the Bollinger Band is comfortably starting to fall lower. We are not overextended to the downside in terms of the Bollinger Band anymore, so there's no clear-cut reason to go long. There isn't a 100% definitive aggressive reason to go long. At most, what you could end up doing basically is going long with a stop loss essentially at this low over here at 390.04. But essentially, aside from that, 390 is going to be support, 388 is going to be support. So far, clearly the momentum is very bearish, so you should be looking for pops to get into shorts. But yeah, especially if we get a close below 390 on Tuesday, that would be very bearish, because that is going to be a confirmation to the downside that this level of support is not holding. So we were supposed to have a bounce. We had a bit of a bounce that's not really a substantial retest of any prior highs. So now if we end up closing below these levels here, that's going to be very bearish for the overall trend. Overall intraday, you have to have especially, it's going to be so much easier to trade if we get a close below that low, because then you could just, the next day you can just lean bearish for everything. The follow through to the downside as like low of day breaks, there's probably going to be a lot of follow through to the downside, and then you could literally just wait for bounces to resistance and wicks, for example, at like moving averages or important levels of resistance, and then you could add short there. And most likely those are the days that aggressively playing shorts and puts really work. So clearly, right, heading into Tuesday, also depending on how futures open, but heading into Tuesday, if futures are red and we're opening below these levels, then it pays to be bearish. But yeah, in the immediate short term, 388 to 390 is support. There's a lot of crazy stuff going on in the macro environment internationally. Yeah, with oil and everything like that. Also, it's interesting to see that the Chinese markets are very overextended to the downside. So hopefully early next week, well, early this week, Tuesday or Wednesday, we see a change in the price of Chinese stocks. For example, Baba, JD, Baidu. We see a good pullback on those, and ideally I want to see the Chinese market really weak, because then if it's just really weak, you could basically essentially just blindly buy into one of those three Chinese stocks that I showed just now, and they would be a pretty safe move to the upside for a high quality play, in my opinion, especially for a few weeks out, over a month out. It's almost guaranteed at that point, because what the Chinese, I mean, every time there's some sort of a lockdown or anything like that, they inject money, and a lot of these Chinese companies end up having a lot of extra money and cash on hand, because the government gives it to them. So yeah, I mean, it's good in the long term for the stock market. So if we catch this bottom on the Chinese markets, it's going to be pretty good. The dollar obviously made new highs, right? The bonds are obviously also showing a lot of weakness, very similar to the stock market. So yeah, we could just, aside from this, I mean, the bonds look very, very weak. Everything looks very, very weak. When taking a look at the VIX had a huge wick, very, very disgusting intraday move on the VIX as well. So yeah, man, I mean, you just have to follow the trend, and the trend is very clearly weak and bearish. And it's just nice. Do not miss out on these opportunities going short. Don't be married to any bias. Going short is much easier. It's much easier to go short in a bearish macro environment, and that's where we are. We broke this uptrend. You know, we were very bullish in July and early August. That's not the case anymore. We're in pullback zone, and we are hoping for, you know, bounces. But overall, in a bearish environment, you have to be bearish. You have to look to sell resistance. And if we break support, it's a good opportunity to go short for momentum. And yeah, man, we have to see if this works out. But so far, the market is bearish. And yeah, so regardless, I hope you guys enjoyed today's video. I'm not going to be able to stream tomorrow. But I will stream again on Wednesday. If you guys want access to the Discord, make sure to join that. The link is in the bio. But yeah, aside from that, I hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff. If there's anything else that I can add in the videos that you guys would find benefit to, you know, comment that. But today there wasn't really much to look at, so it was sort of you know, like overall sort of a recap video. But yeah, when there is more important things to look at that I see, I'll definitely do that. But yeah, I'd love to hear your input and what I could add and what you guys would like to see. All right, so yeah, I'll see you guys tomorrow. Well, yeah, I'll make a video tomorrow. But yeah, thank you. Have a good one.